And that sound means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we have some fun breaking down the news, the information, the charts. We start at the top of the market, looking at the broad indexes, then break it down into individual companies and anything and anywhere in between. We've got a fun show today. We've got a full pack crew here today. We've got Matt, we've got Cody, we've got Noah, and we've got Coach Mark, all from Tackle Trading here to bring you some insight. On today's show, we're going to have a conversation about rotation. We're seeing some interesting action moving from the stay-at-home plays into some of the more conservative defensive plays. We're going to have a conversation about that and the undervalued stocks picking up a tick up. More government fiscal stimulus planned or projected out of the Eurozone and the U.S. There was actually some passed in Europe and conversations about it in the U.S. Interesting company news across Twitter, where they're getting into a little bit of a feud with President Trump. We'll break that down. Amazon, Disney, Apple, and more here today. Maddie, let's start with you. How you doing, sir?
You know, Tim, I'm doing good. I'm excited to be here with the crew to break down the news of the day and walk everybody through the market action.
Yeah, we got Noah. No, I'm assuming you're doing great. Yes, sir.
Well, it's great that you would assume that because that's usually the case. I am awesome on every day of the week, every possibility to be awesome. I'm
Mr. Positivity over here.
It's just what you got to do, right? I mean, otherwise it's just Wednesday.
Noah and Mark are at odds.
No, Mark just focused on the information coming out of the markets right now. I know that this is kind of grabbing him. Obviously, the stuff with China, we'll get into it here in just a second. Before we get into analysis real quick, if this is the first time here at our channel, welcome. We love having new beginners, and anywhere in between, come and join us. Click the subscribe, click the bell. Come back and join us every day when we do this show. Let's get down to the analysis. Doji at the 200 period moving average. Now, we had a technical breakout here yesterday, Matt, on the intraday. We had a level at 29.50. It took off over that 3-day weekend. We talked about that yesterday, but now we're hesitating here on the S&P. You got a little doji there, and it's failing at that moving average. It's a line in the sand. It's a battle zone, Matt, in some regards between bulls and bears. What's your read on the chart?
Very similar to the read yesterday. I mean, the breakout yesterday, we saw it, go above that 200-day moving average, go above that 3,000 level. But once again, when we draw those lines in the sand, 3,000, right? It's a significant whole number on a $3,000 index. It's a zone around those levels, and we've talked about that, as a support and resistance zone many, many, many times. It's not a finite number, and so when you break out of that initial resistance level, yeah, it's a positive, and I'm certainly positive on the market here today as well. Even though we are dojing, showing a little hesitation here today, but the simple reality is it takes time to really get above those zones, and it wouldn't surprise me to see some consolidation within that zone of support or i.e. resistance. Between that 2770 level and really 3020 level. I'm still taking this as a bullish indicator at this point, even though I am a little cautious with the breakout. I mean, we have been fooled before on breakouts, so I'd like to see it close above that 3,000 level before we really confirm that as a breakout. As of right now, it's punching up there. It punched up there yesterday. It punched up there earlier today. It just hasn't been able to hold its breath up there. So let's see a close above 3,000 before we officially call it a breakout. But as of right now, the bulls still have control.
Yeah. Noah, flash through all the indexes real quick, and let's kind of talk about all of them in general, because they're not all in the same technical pattern here. Obviously, the S&P is hitting into those zones. That's key, and it's the biggest index for me in terms of what I call the market. But the NASDAQ, very different, obviously, and the Dow and the Russell as well. Give me a quick read on all four of them if you can.
Yeah, NASDAQ's given a little pullback into that 9-period moving average. It's dipped down even as low as the 20-period moving average. So you're seeing a little bit more of a correction, whereas the S&P is just dojiing. Let's take a look at the Dow. Dow's got a little bit more energy than the S&P, and it's got room to rise up to that 26,000 ballpark where the 200-period moving average is. It has a little bit more clean air, so I wouldn't be surprised to see that putting a little bit better run. And then if we switch over to the Russell, same, it's got some room to run up to the 200-period moving average. It is getting a little bit range up. And it's got some old support resistance zones back in here that it's dealing with at that 1430, 1440 ballpark. And a little bit of a spinning top type candlestick. But across the board, I think you're getting pretty similar signals where you're kind of range up and toppy pattern. So it'll be interesting to see if it can power through and break out.
Yeah, back on the S&P if you can for just a minute. I want to get Mark's take on this as well. Mark, moving averages are a key thing for you. We had a technical breakout. Now we're hitting the 200 daily. Is that enough for you to have caution, pause here? I mean, the market is right now. So what's your read here, Marky?
Well, just from an algorithmic standpoint, oftentimes those first and second test of a moving average, they hold. But the more times it's hit, the more likely that you have a continued breakout of it, especially as short-term moving averages catch up. So this is very, very common. I mean, it's a common on a 5-minute chart, a 15-minute chart, an hourly chart, a daily chart, a weekly chart. When you come up to a major moving average, usually they hold on that first test, second test, but then they get weaker and weaker and weaker. So from, and that's just normal price action, normal price action.
No, give me a heat map if you can, because I think the doji on the market doesn't tell the whole story here today. One thing that's really, really obvious when you look at an S&P 500 heat map is we're seeing stark red in some areas and green. Industrials are running here today. Insurance companies, banks are up big. Consumer defensive plays are up big. Matt, you talked about this. You brought it up with us yesterday, and kind of talked about the sector rotation potentially developing. And it's really hard to know it's happening in the moment, but now we have 2 days of it where it is definitely becoming a theme. Matt, what is your read on that topic?
I think we're seeing a continuation of what we've been seeing over the last week. A lot of those distressed areas of the markets have been double bottoming, double top, showing reversal technical patterns such as M's and inverted head and shoulders and so on and so forth. You look at the 1-day relative performance here today, and it's really kind of stands out. What's really kind of moving today? It's the areas of the market that have been distressed, the same areas of the market we talked about yesterday: consumer defensive stocks, industrial stocks, financial stocks. You have your cruise line stocks. You have your value plays. And again, the question I still have today that I posed yesterday and what I've been seeing over the last week is, are you seeing this rotation going from the pandemic plays, the growth plays where everybody was just trading momentum to more of a value play? And that's what I'm seeing in the heat map today. And that's what I'm seeing in the 1-day relative performance. When you look at the 1-week relative performance, it's not even close, guys. Financials up 8% in the last week. Industrials up 8% in the last week. Real estate up 6.5% in the last week. Energy up 3.5% in the last week. And what's lagging? Well, what's lagging is those areas of the market that really drove this recovery in the stock market. Communication services, relative to financial, industrial, and real estate, only up 2.3% in the last week. Technology flatlined in the last week. Healthcare down 1% in the last week. So when you're looking at the performance of the sectors, you are starting to see some very clear evidence and very clear indication that money is coming into these distressed areas of the market from a value perspective, and the momentum of those pandemic plays and the momentum of those growth plays, at least in the short term, is seems to be fading even stronger every day.
And back on the charts here for a second, if you can, because I mean, this is definitely happening on the heat map. It's happening on the broad indexes. We've seen it in the sectors, but even just some of the names I track. I mean, guys, Beyond Meat down big today. That was kind of one of those hot Momo plays. Right now, it's down pretty heavily. Datadog, The Trade Desk, Shopify. Like, look at Shopify. Shopify was a market darling during the run up, and just 2 big fat red candles on the top, down 6% here today, coming back into a moving average. Stocks that are up today, like Matt mentioned, some of those reverse type of plays. I mean, Royal Caribbean is up big here today. RCL. Mark, I know that you track a lot of this as well, and especially on your individual watch list. Do you think the rotation is happening here? We've seen it for 2 days now.
Well,
no, we've seen it for a week, not 2 days.
Well, listen, Matt talked about this yesterday. The only trades I did were in those distressed areas yesterday. I thought the analysis yesterday was accurate. I think you're seeing a continuation of that today. That's the only place I did trades yesterday, was in those distressed areas. So
got to move from one area.
And if somebody's putting their money where they're there, then obviously they agree with that. I think Matt's analysis on that was spot on yesterday.
But are these swing moves or are they structural moves here? I guess is the bigger question for me, because I'm looking
rotation and value is not a swing move.
Yeah.
Rotation into value is a position investment move. You don't rotate from growth to value based on swing trading principles. That's not a short-term play.
Mm-hmm. So is the market doing it, do you think, for a longer term perspective? Because I like the pullback in tech.
Well,
Really,
if
give
we
me
see a
Excel.
leg down, everything's going to see a leg down. But as of the data we're
Mhm.
seeing right now from a technical as well as a rotation perspective, yes, you are absolutely starting to see rotation going from growth to value right now. The
And
same
it
way we
makes,
saw
and it,
rotation happen 2 months ago from value to growth. These
and it
things
makes sense.
happen.
It makes sense from a sentiment standpoint too, right? Nobody believes that we're ever closing down again. I
No.
mean, nobody believes that. And so it makes sense in the market price action that you're seeing these companies that need people, Cinemark, MGM, the cruise lines, the airlines, Six Flags, retail. It makes sense if that is the belief that money would start rotating in there.
Mhm.
Now, and that belief certainly can be proven false in the future. But again, the difficult part in terms of identifying rotation is, whether it's 2 days or a week, it's still in a very, very short time frame. And the biggest question is this short rotation we're seeing from growth to value, is it structural? Is it hedge funds positioning there? Is it institutions positioning there? Are they looking at taking this from a longer term perspective? Has the entire market shifted to more value based? Those are questions that are going to be answered over time. But as of right now, very early on, you are absolutely seeing a rotation from growth to value right now.
Yeah. Yeah. Let's talk a little bit about this fiscal stimulus stuff. We can stay on the broad markets while we do it. In fact, bring me the dollar if you can here. Noah, UUP would be a good one to talk about because it will affect currencies, or even the euro dollar cross pair. Actually, give me the euro dollar cross pair because there was a fiscal stimulus passed in Europe as well. Matt, McConnell's talking more about a fifth package coming down the line, says it's obvious that it's going to be necessary. They're not going to talk about that until June when they reconvene, I believe. In Europe, we had a $750 billion recovery package. And there is this assumption that we don't need to close down again. And this reopening theme has been a very positive thing. So the rotation into these beaten up stocks does make sense, especially with the backdrop of fiscal policy. What was your reaction when, you see more and more headlines about them printing more and more money and pushing it in the market, not just in the US, but also in Europe?
Well, my initial reaction to the Euro Commission unveiling a $750 billion package, I just kept thinking, like, man, in America, we talk trillions of dollars. They need to catch up with the times. I mean, we've increased our debt by about 4 trillion, balance sheet by about 3 trillion, stimulus is by about 3 trillion, excuse me. And Europe is in the billions. So Europe needs to grow up a little bit here and start getting with the modern monetary theory times. That was my
America.
That was exactly
America.
Everything bigger than everybody else, including stimuluses, monetary policy, and debt. We do it better than anybody else.
I don't know about that. No, I'll push back on that.
I'll do it.
Japan's pretty good at it.
Oh my goodness, you ruined the joke. Just because you wanted to get your little creative comment in there, you ruined the joke.
It was a
yes,
funny joke,
Japan's debt to GDP is worse than America's, but total debt burden, we have more than anybody else in the country times 10. So
joke killer.
Yeah, joke killer.
But not as a percentage of their GDP, I don't think. I actually think Japan is bigger.
Yes, I said Japan has a bigger debt to GDP ratio. Yes. Do you want to currently list out the countries with a bigger debt to GDP? Because there's 17 of them. Do you want me to list them in order for you?
Do you have them?
Or do you want to move on?
I'm happy to move on for sure.
Okay.
I thought you had more analysis. I'm getting a little Wi-Fi in and out.
No, you ruined the joke. I'm waiting for you to start the analysis again.
Can you hear me yet? I don't know. All right. Sorry about ruining the joke. I did not hear it. I must have stepped on your toes there, but I had a little Wi-Fi cutting in and out. And yes, Japan does have a bigger GDP to debt ratio. Matt, I appreciate you acknowledging that. Obviously, it's a concern. I go ahead. I have no idea where we are right now. So explain to me what I'm missing.
No, I'm gonna let you just you ruined my jokes. I'm gonna let you just kind of sit on the hot coals for a second.
Well, fiscal stimulus is going to happen. McConnell's going to pass something. We don't know when that is, but that does give a backdrop to every one of these economies. that markets are somewhat stabilizing. It's one of the themes of the bull side of the argument. There's no doubt about it. And it continues. McConnell coming out today with a positive tone there, Mark. He's been negative recently about not wanting to pass more of this and that, but it seems like even the Senate is starting to get on board with more fiscal stimulus. Mark, do you expect that to happen here pretty soon?
Yeah, it's going to be muted, and it's going to be interesting just from political theater where that money goes. I have a feeling that it's going to go less to individuals and more to entities, maybe states in some level, businesses. I don't think you might see a little bit more for individuals, but there doesn't seem to be a lot of appetite for that.
Mm-hmm. No, it does. In fact, I read a couple of posts here today, even just on that unemployment insurance, that where it needs to end in July. People are concerned that people are making a lot of that money. We've talked about that in the past. Let's talk China here for a minute. Let's move through this. Keep talking about markets. Another major storyline that has been developing on the rhetoric side has been China. Give me FXI if you can. Marky, update us on everything you're reading, because I know that you're deep into this part of the analysis. So what are you seeing from the U.S.-China relationship right now?
I mean, listen, you're seeing, like, in normal market conditions, if this was a normal market, this stuff would be front page news, and this is what we'd spend 30 minutes on. The market, and while it causes these brief intraday sell-offs, like you saw one yesterday, these headlines are constant. You know, one headline, one headline, one headline. They've been constant for about 10 days, and they cause a little brief intraday sell-off, but then the price quickly gets absorbed, market moves on. I mean, there's a ton. I mean, we can spend 25 minutes discussing everything that's happened in the last 24 hours. Market's not going to care till it cares. It's just
before we do that, though. No, hold on. I got to acknowledge something in the chat. Matt, I didn't get the joke. What was the joke?
Everybody's
saying
that
it was a great
that Europe's not as good as us because we get to print more money. That was the joke.
Europe was putting in billions of stimulus where we put in trillions. And
yeah, I was telling Mother Europe to grow up and start getting with the debt parade.
I see.
We were making fun of MMT by saying that we're printing more money faster than Europe is. That was the joke.
Apparently,
you could have gone with something like our printing press is bigger than yours. I don't know, something like that.
There was a lot of ways you could have took it, but I don't think Tim would have caught any one of them.
I didn't catch it. I didn't catch it right over my head.
We should have just left him in the dark the entire show. He would have been thrown off.
Hey, my team tackle out there is coming to my back. They're like, all right, they're going to tell me what this joke's all about. Mark, anyway, back on China here for a second, because you're right. The market doesn't seem to really care about it. The tech sell-off today is not because of China, but there is a bunch of headlines that are concerning. Protests in Hong Kong are picking up. There's a House bill, here in the U.S. I know they've talked about bills over in their parliament as well. What are the major headlines, Mark, that you're seeing there matter? What are like the top three?
Well, I mean, really, to be honest, to just sum it up, either you are, as an individual trader and investor, give it merit and are a little more cautious than you normally would be, or you're not. As a market as a whole, they're not, like, overwhelmingly. These intraday sell-off on the headlines get sucked up as a whole. That's a question you have to ask yourself as an individual investor.
It's tough, though. It's tough because the headlines are quite astonishing right now. You have the Treasury coming out today and saying they could potentially control transactions, freeze Chinese officials' assets, visa restrictions. Pompeo declares Hong Kong is no longer an autonomous, two states, one nation type policy. You have threats on some border disputes within China right now. And the ultimate question is, what is Trump going to actually do about this? That's the ultimate question, because as of right now, it's just rhetoric. That's what it is. And it's very difficult, in my opinion, for the market to take this to the seriousness that they should take this, and they should take the Chinese geopolitical situation in the seriousness that it deserves. But it's hard for the market to do that, given the fact that this is not the first time in the last 2.5 years that we've heard Trump or Trump administration officials or, President Xi Jinping rarely does it, but Chinese officials or state-run media out of China, it's not the first time we've seen them throwing lobs at one another. They've been doing it for 2.5 straight years. And so it's kind of like that boy who cried wolf. At some point, the wolf's going to be there. At some point, China's going to matter to this marketplace. But what is that ultimate thing that Trump does? Does he pull the phase one trade deal? Does he move away from that deal? There's speculation in that front. But there's also something called the 1992, excuse me, the U.S. Hong Kong Policy Act of 1992. And what that policy act gives Hong Kong specifically is it gives them special status from a trade perspective that mainland China, Beijing, Shanghai, and mainland China does not, does not have. So in that capacity, does Trump pull the phase one trade deal? Does he pull the special status that was given in that 1992 act from Hong Kong from a trade perspective? There are things that Trump has at his disposal. If he truly does want to hit China from an economic perspective, does he go there is the ultimate question. And at what point does the wolf really arise and the market wakes up to the fact that there is some risk here in the Chinese-U.S. geopolitical tensions?
Obviously, pulling the phase one deal would be the one that would probably shock the market the short term, don't you think? I mean, that would be,
I think pulling a 30, what would that be, 28-year policy on Hong Kong that's been dominant in Hong Kong could be as important as, that could be as big of a bullet as the phase one trade deal.
Yeah. Yeah, obviously, we'll keep talking about this. Rhetoric has been high. Tensions have been increasing. And if you read the headlines, you read the comments from both sides, it does concern anybody, I believe. I'm obviously aware of it and concerned about it. Mark, it's affecting the way you're doing a lot of your trading, but probably swing traders and momentum traders is probably not, So I think it comes down to what your assessment of the risk in this whole situation is. Let's keep moving through the markets. Let's keep talking. Give me XHB if you can. More data out of housing, Matt, that was very encouraging for the real estate sector. Home builders, and new home applications were up, 9% from last year? I think I read in the report. What did you see there?
Yeah, regardless of the new home sales, we saw that report came in yesterday, a really, really positive number on new home sales. Tomorrow, we're going to get existing home sales, and that's going to be a very important number for pending home sales as well. So we'll cover that tomorrow. Mortgage applications actually saw an increase of 9% year over year. And so obviously we're starting to see some positive data coming out of residential properties. Obviously, yeah. March and April were going to be absolutely devastating as the economy reopens back up. And let's face reality for a second, guys. Most of the jobs that have been lost, what area of the market are they in?
Service, right? I mean, you're talking,
cheap labor,
and movie
service,
yeah.
Which are not exactly the demographic that goes out there and buys a home, correct?
Mm-hmm.
Okay, so as the economy reopens up back up, you're starting to see some positive data coming into the housing industry. Mortgage applications up. Again, we'll have to see pending home sales tomorrow, but we are seeing positive data coming out of the housing sector. Now, that kind of goes in line with what we've been talking about for the last month in the housing. Residential housing is not my biggest concern right now from a real estate perspective. It's commercial real estate. That's the biggest concern right now. And we're seeing weak data coming out of commercial property. We're seeing positive data coming out of residential. So you have a little bit of a mixed beast there.
Mm-hmm. Mm-hmm. Give me the symbol JETS, JETS. I want to talk about the airlines here. Obviously, it's a take your pick situation with airlines, depending on which ones you think are the best bet. They have been rallying here. I did see some concern here from, the House, I believe, was sending a letter to Treasury Secretary Mnuchin. Mark, did you see this, by the way? Are you aware of this one?
On the
airlines? Essentially asking him, why are you cutting workers' hours? You took federal bailout money. I knew you were going to get some backlash on this throughout this whole situation, Matt. Over time, as these companies who did take money, if they don't abide by those terms, I wonder how that public view is going to look. The whole idea with the payroll protections, the federal money, the slush fund, whatever you want to call it, is if we're going to bail the airlines out, you protect your workers, and they are cutting workers' hours dramatically, I guess. I don't know whether the airlines are an interesting play down here. I know they've been rallying for a week here. Matt, what's your read on airlines here? Because this is the big reopening play. If people really believe in the reopening, they're going to get back on planes, right? And airlines have been depressed.
Yeah, but even with the reopening theme here, obviously the airlines are going to take a while to come back to full service here. I mean, most projections have that coming in the back half of 2021, even into 2022. So obviously the stock market is always forward thinking. They're always pricing in 6 months, 12 months from now, 2 years from now. They're always thinking to the future. And so if the reopening theme, if you believe in the reopening theme, and if you believe that the second wave is not going to occur in the fall, that we're going to continue to social distance, the airlines could be a nice play here. Now you are starting to see reversal characteristics in jets. This is an ETF that tracks them. You see a double bottom right there at about $12. You see a double top right there between $15 and $16. You did break out of that level, and that, from a technical perspective, Noah, you would have to call that a reversal pattern. Even if fundamentally and behavioral you're a little concerned with the area, you got to look at that as a potential reversal.
Yeah, you have to like the chart in terms of reversal characteristics. Mark, are you targeting airlines at all as a recovery play? I know that these were some that were on your list with naked puts and willing to take ownership at certain levels, but now we've rallied considerably. What's your read on the airline sector?
I like so many other of the distressed areas better than airlines. Airlines still, I mean, even if you get up to 80% of where you were, I mean, they just have more cash burn than other types of companies. I like other areas of the distress plays, but lots better.
Let's keep working through the markets. Let's hit the big picture commodities if we can here. Oil is next. And I don't know if there was new updated information on the CL future contracts, but we did get a question from Mike S. Mark, I'll ask you in a second about USO and whether or not they can purchase more of those CL contracts. But crude light in its own, I mean, we've been dojing here for a few days. Inventories data usually is on Wednesdays, but with Memorial Day on Monday, that is now going to be pushed until tomorrow. Mark, what's your read on oil?
Well, the negative news today is that Russia is inching up their production. Russia has said numerous times, hey, listen, you might not be able to make oil at low levels, but we certainly can. And Russia is always the most aggressive in, and they're the least willing participant in oil cuts anywhere. So they've given signals that they're going to start producing a little more. So that's what's causing the little bit of sell-off today. People are still very bullish on it. U.S. production still slashed, but that's what caused the negative today. So
isn't that a natural with oil? I mean, obviously, as the price goes higher, people are going to want to reopen those rigs too. The rig counts have been going down, but the higher the price gets, I mean, people are going to want to make money. These companies need to make money.
It is the beautiful thing about commodities, the natural balance between supply and demand that is always at work play. That's why I love commodities so much.
Yeah. Maddie, what you seen in the chart there? Obviously, it's been a V-shaped rally for a month at least. We're riding that 9 EMA and whatnot, but dojing here up at a high base. What are you seeing in that chart?
I think this is what you want to see if you're bullish on oil. After the metric rise we had over the last month, a record-breaking month we've had in oil. Now, obviously, when oil's down, 85% from the highs of earlier this year, a record-breaking month is not the exact same thing as breaking out of all-time highs, right? So bottom feeding, the numbers from percentage-wise, when you're looking at bottom feeding, just get out of whack to a certain degree. Delta up 2% or 5, 6, 7%, and it doesn't even look like that on a chart when you're talking about a stock or an index or an ETF or a commodity that's been beat up so much. But if you're a bullish on oil and if you're looking to trade to the bullish side on oil, this is what you want to see. As you get overextended, you start to play a little bit of defense there. And 2 times out of the last 3 days, last Friday and then obviously today, as oil started selling off on the intraday perspective, where did it come into? It came right into that rising 9 EMA. And this is what we see a lot of times from a technical perspective when something gets overextended. Either one, it starts to do a little bit of a bullish retracement, and bullish retracements have not been good in this marketplace. Or 2, it consolidates and forms a little bit of a high base technical pattern. And that's what you're seeing on oil right now. You're seeing a high base. Now that high base is simple consolidation at the top end of its channel. And what you typically see as that consolidates is that RSI will slow down, and we're starting to see that RSI slow down a little bit. The 9 EMA catches up to that, and then you have a potential breakout play here. And so, no, if you'll drop this down into a 30-minute chart here, you'll see a very, very clear area of resistance from a technical perspective, right there at about 34.60. And so you could certainly map out a potential trade above 34.60 from a delta perspective, given the fact that we did get overextended in the short term. You've consolidated for 4 or 5 straight days. Now, obviously, we have oil inventories typically comes out today, but because of the holiday on Monday, oil inventories are going to come out tomorrow. So maybe we're consolidating in the face of that economic report that's going to come out tomorrow. But I guarantee you there's going to be a lot of traders on the back end of that economic report that if we do see that breakout of 34.60, they're going to be looking to buy above that level. From a short perspective, I don't see a short here on oil right now. You don't have it from a technical perspective, and given the fact that we've had supply get cut dramatically, demand start picking up, given the fact that we've seen a rush to reopen the economy, I don't see a short here on oil. So even if oil comes down, say to $30, I still see that as a potential buying opportunity off that $30 support level. But as of right now, I think most traders are waiting for the oil inventories coming out tomorrow with the potential breakout of that high base of 34.60.
Gold next, if we can. Actually, I almost forgot. Mike S. Mark, I want you to take this one. What is your take on USO not being able to purchase any more CL future contracts? Was there new information from our conversation from last week?
No,
Same one?
Same one.
Same
The
thing.
broker doesn't want to do, brokers across the world don't want to do business with ETFs anymore in the oil space, Wisdom Tree, USO, whoever it is. So USOs came out and said that, hey, we still have the ability to roll. They weren't banned from purchasing contracts, just their broker doesn't want to service them anymore.
Got it. And then Chris, Matt, I'm going to have you take this one. If there's a rotation from growth to value, what are your thoughts on rental car companies? Hertz went bankrupt, but car stocks is just breaking out. HTZ obviously is a no. Give me CAR. There's going to be a lot of picks, obviously, in those value type companies. Matt, would car rentals be one of your interests?
I think kind of like what Mark said on airlines. No, from a value perspective, I'm not interested in car here. I see the reversal pattern, and the break above 20 is legit in my opinion. I would have no fault with anybody who took that trade or that position with the double bottom at 10, the double top at 19 to break out of 20. You're starting to see momentum come into Avis, but this is not an area of the market that I typically focus on in general. So because of that, no. And I kind of see that a little bit as the airline stocks. Yeah, you're seeing momentum come into most value right now. You got to kind of pick your poison there to a certain degree. And especially with the bankruptcy of who was the bankruptcy? It was
Hertz.
Yeah, Hertz. That gives me a little bit of pause and a little bit of concern there. So no, I'm personally not looking at the car rental space as a potential investment. But from a technical perspective, I certainly see it.
And Johnny, that's been an ongoing debate we've had forever. What is the best way to trade CL or oil?
Well, the best way to trade CL is the micro contracts on crude or the mini contracts on crude. That's the best way to trade it.
Well, that's still half a contract. I mean, that's still a huge margin. I mean,
but on the micro contract, it's a significant margin for some retail traders, but most traders can handle that type of margin on the micro contract. Micro contracts have been a wonderful way for the retail investor to play the futures market. Now, you should never trade the futures market if you don't have the education level, the experience level, understand how margin expands and contracts based on price versus strike. There's a lot of different ways, but you have options on futures. The best way to trade crude is directly into QM or CL. That's the best way. But for a lot of traders that do not have the ability to trade those types of futures contracts, that's where the debate comes in. Do you play the energy sector? Do you play the drillers? Do you play the refinery companies? And typically speaking, and again, typically is not this market condition, but typically speaking, it is the drillers that have correlation between oil's price and what the drillers do, like Chevron, ExxonMobil, and so on and so forth. But it's the refinery companies like Phillips 66 and Valero, in my opinion, that are probably the better way to play the breakout in oil or the breakout in the energy sector in general. So number one, if you have the ability to trade futures, you got the micro contract in QM, you got the E-mini in CL, you can trade that directionally, you can trade options on them. If you don't have the experience, that's where the debate comes in between the refineries versus the drillers. Right now, I'm more a refinery person. I like Valero, I like Phillips 66. I'm shying away from the drillers at this point. But typically speaking, in a normal market condition that we don't deal with pandemics and potential global economic depressions, typically it's the drillers that have correlation with oil.
Mm-hmm. The
And
next time
Steve said he didn't realize there were micros. Be aware that the QM contract is half a contract. So it's not like micros on MES where we're thinking of a very smaller, it's still 50% of a CL contract.
Mm-hmm.
So it's still a chunk of change.
Yeah.
So what you're saying, Mark, is 50% of a lot of leverage is still a lot of leverage.
It's still a lot of leverage.
The next time I take an oil trade, it'll probably be a fixed risk spread using options on CL, by the way. I can control the cost, I can control the risk. And, if I'm going to hold something overnight and play one of those, Matt, I like the options on CL personally, is a way to play it. But obviously,
and the options are a great way to lower costs. They're a great way to control and mitigate risk. But again, I mean, when you're talking about trading options on futures, that's like trading stock options on steroids, right?
Mm-hmm.
You still need to have an advanced understanding of the way the options market works, and specifically the futures market as well. So I've said this many times in my life. The futures market is a market that everybody should aspire to have the ability to trade. Because when you look at the marketplace over even the last 2 weeks, but if you look at the marketplace over the last 12 years, the majority of the price action that happens in the stock market doesn't happen when the stock market opens up at 9:30 and closes at 4. That's not the majority of the money coming into the market. The majority of the price movement that happens in the market, and when I say majority, I'm talking upwards of 95% of the price movement happens when the market is actually closed in the futures market. And so if you aspire to be a day trader, if you aspire to be a commodity trader, if you aspire to take advantage of the overwhelming evidence that the overnight action, when the Chinese market opens up, the Australian markets open up, the Japanese market opens up, and when the European markets open up, that's where we see the majority of the price movement. So if your aspiration is to be that day trader or to learn how to hedge your portfolio in the case that if the futures market gets absolutely obliterated, yes, you start in stock, you move to options, and then you have a graduate program coming into the futures market. You do not start trading your career in trading in the futures market. You have to have the experience level necessary in equity and equity options before you ever even come close to touching the futures market. And in my opinion, you should have a minimum of 2 years trading, in my opinion, without advanced education before you touch the futures market.
I love it all. By the way, there's some old Coaches Show replays. If you're interested in learning about futures, find the Coaches Show tab. And I think they were in March, Matt, we did with Coach Keith.
Yeah, we did four in a row with Keith, 4 Coaches Shows in a row, from an introduction to futures trading, to day trading in the futures market, to utilizing the futures market as a hedging vehicle, to also trading options on futures. And Gino joined us for that one on the last one. And Keith's one of the best futures traders I know, and just a wonderful educator. So if you do have interest and you have not viewed that, or if you didn't even want to review, I would go look at those Coaches Shows where Keith came on and taught about futures. Yeah,
and I just dropped the link to the Coaches Show thread in there. I believe they were in March, so you can probably find them just by scrolling back through the old archives and whatnot. Let's move on. Gold next here, sitting on support. The headlines around gold are always so funny to me. I mean, there's just big pronouncements. Gold sells big as the market has a risk-on attitude or appetite or whatever it is. People love making it sound more serious than it is. Gold holding support here, Matt. I don't see much in that chart that concern me or even new analysis.
No, I do see something from an intraday perspective that I do believe is important to note. If you'll break that down on a 1 hour chart, you'll see that 1700 hold number. And when you're looking at this from an intraday perspective, you'll see how important these significant hold numbers are. On the sell-off yesterday, where did we come into? We came in smack dab into that 1700 level. On the sell-off we had today, where did we come into? right there on that 1700 level. You got to like the gold's playing defense in a risk on environment. You got to love when oil's playing defense. The same way when you get overextended in oil, you got to love the fact that on negative days, it doesn't sell off and it holds its intraday support levels and it holds its short-term moving averages. And so from a technical perspective, you got to like gold anywhere above 1700 here.
Mm-hmm. Yeah, and obviously that down channel is in there. I see a trend line you could draw on the downside. So you're going to have a little fight here developing as it comes up into 1730 and whatnot. But that support, that round level, all of it has been holding. And obviously gold is an asset.
And currently if you drew that trend line from the peak and connected all those peaks down, that's exactly where you currently are right now.
Mm-hmm.
And so obviously if we can get above that level, then that's going to be even more positive for gold. Right now, from a daily perspective, you're not looking at swing trading gold. I'm just saying from a position to an investment perspective, you love the fact that gold held 1700.
Mm-hmm. The dollar we talked about. Give me a quick peek at Bitcoin. Just one last one while we're in the skyline, and just a positive candle holding support as well here, guys. I mean, on the daily, so kind of a similar type of thing in that regard. You had the downtrend on the intraday. You had the sell off from 10K to 8,800, but one green candle. Just notable at all. It needs to break above 10K for you to have any clear signal there before we get too crazy on Bitcoin. That is our skyline. We're going to be breaking down individual company news next here, guys. Couple things. Number one, we have a webinar tonight. Coach Tyler Craig will be live at 7 p.m. Eastern. And so in the chat, somebody out there in Team Tackle, help me make sure I get accurate information out there. Just type in options webinar tonight at 7 p.m. and that's here on the YouTube channel. And then Coach Noah, you're going to be teaching the Step System Mastermind group, I believe at 8:30 for those who've gone through our premium product there, one of the flagship products there at Tackle Trading. What are you going to be covering tonight in the Step System Mastermind group, Noah?
Well, we're going to be talking a little bit about scaling into trades. That's going to be one thing we're talking about, how to set up and plan scale in on some of the positions for the smaller stock trades. And then we had another topic, Tim. Now I'm drawing a blank on it. We talked about it yesterday.
Multiple, actually, aggressive versus conservative confirmation.
Aggressive, yep.
Yep.
So yeah, aggressive entries versus conservative entries. And I actually really like the idea of scaling in, taking a small amount of money and being aggressive with it, and then adding to the position when you get your conservative confirmation.
Mm-hmm. I'm with you all the way. And by the way, if you are new to our channel, as always, I'm reminded to ask you if you want to come and join us every day, click subscribe, click the bell so you can be alerted about that. And we put all kinds of content out here. We do this halftime show every day. We do that weekly Wednesday show. We add videos quite often and whatnot. And we love you. If you're Team Tackle, pop in Team Tackle in the chat. Let us know that you're out there representing. Let's get into some companies here, guys, if we can. I want to start with space and SPCE. I know it's the only way I can bring up the space conversation. I know Virgin Galactic's not actually launching it, but SpaceX is not a publicly traded company. Now, here's the thing. One thing about this whole situation, Matt, I'm going to be watching this rocket launch today at 2:30. There's no doubt. I'm going to watch it take off. I know they haven't put actual people up into space for a long time. They won this contract quite some time ago. We talked a little bit about it yesterday. Matt, you going to watch it? Is this historic for you?
I'm going to watch the Armageddon liftoff for the third time in the last 8 days and pretend it was the SpaceX launch.
Yeah. You cannot watch Armageddon 3 times in 2 weeks. I forbid you. I will take your Netflix away. I don't know where you're streaming it. That's not acceptable. 2 is enough.
I have it downloaded on the iPad. You can't touch me.
Dude, I'm going to watch this countdown and take off. I know weather, by the way, might affect this, but I think it's interesting. You need positive news in these type of storylines to get this industry excited. And by the way, Matt, when I traveled for, and taught workshops and whatnot, whenever I ask people what companies they're interested in or what areas of the future they're interested in, space technology was always up there. It was always at least brought up in every room I was ever teaching, and somebody brought it up.
To be fair, that was also brought up because they probably brought up Tesla first.
Mm-hmm.
Right?
Oh, they love Elon on this.
It wasn't because I know exactly what you're talking about. You and I would do the exact same thing. We would have this breakout session where we would have an activity on investing, and it would start with what basically the Warren Buffett approach of invest it. Just give me something you like, right? Give me something, something you like, something you think is going to be around for a long time, whether it's a stock, a commodity, a currency, crypto, idea, whatever it is. Let's map out that idea, because simply because we have ideas, and I've said this many times, I've had some of the greatest ideas in the history of mankind until you map it out, and then you realize how, illogical, irrational, and how it could ever work, right? An idea is just an idea until you put the data behind it. And so, what would the number one company we would always get asked about? Number one.
Tesla was pretty common up there.
Tesla, Apple. You'd always have your
Apple,
Apples, your Microsofts, your
Amazon,
Amazons, your Googles, your Facebooks, all of those, the FANG stocks, they were obviously dominant at the time. But Tesla was right up there with everything. So when you talk about, getting asked about space, what you're really getting asked about is Elon Musk and Tesla.
Mm-hmm. Mm-hmm. It's cool, dude. I mean, the cool factor is off the charts. Just my nerd heart. I mean, I just
watching
into this.
Watching that launch into space, those rockets fire. I mean, come on, who doesn't get geeked out at that?
I'm gonna enjoy it. I'm gonna
go watch Apollo 11 today as well. That's what I'm gonna do.
Is that the one where they crash?
America.
Tom Hanks, dude.
I never saw it, so I don't know.
America.
Knock on.
You've never seen Apollo 11?
Oh,
wow. You're missing
It's
out.
Apollo 13, isn't it?
Thank you. Apollo 13. Thank you.
All right.
Maybe the 11 was the one that crashed.
I think so. That's why I brought that up. I have to remember my history now and look it up, but not going to think about that today. All positive thoughts. Very excited, very geeked out about it. By the way, speaking of Tesla, let's bring up Tesla next. Actually, they are dropping the price of their cars by 6%. Matt, obviously trying to come out and make it a little bit more affordable and whatnot. The stock is stuck in a range up here. It's always grabbing people's attention. Dropping prices. I mean, is that a good sign for Tesla? We've been talking about how they probably are going to be a little bit too expensive in an environment like this. But what's your thought on that, Matty?
They're still expensive in an environment like this. When you have 30% potential unemployment numbers, and the Minneapolis Fed chief Neil Karkashi, I think his name is. He came out and said that at the top of the unemployment level, we should see about 30% unemployment. And that's kind of the number we've seen out of Wall Street. That's the number we've seen multiple times coming out of the Fed. Jerome Powell has talked about that number multiple different times. So whether you're paying 100,000 or 94,000, I don't think it has that big of a deal. You're still pricing yourself out of a big range. But that doesn't mean Tesla does not go at prices and revenues. Tesla goes at what people think Tesla is going to be 20 years from now. So I don't think that 6% drop in that Tesla made and Elon made on his vehicles is going to have that much impact on the actual valuation of Tesla.
No, a high base up there, an entry. This is kind of something you would teach in the Step System Mastermind group. The difference between conservative and aggressive entry here would have to come down to intraday analysis. How would you approach breaking that chart down just to try to identify, okay, if I'm going to play a swing trade, where and how would I trigger in?
Well, ultimately, that consolidation pattern out there, it really is a pretty good setup for an energetic move. Whenever you see a pinch in on price action, you're watching for a breakout. Now, probably the biggest challenge I see with this is it could break up just as easily as it could also break down. You'll get a pretty good size move out of this type of consolidation. So what I would watch for, Tim, is I would take it down intraday. And for an aggressive entry, I'd probably want to see it take out these daily highs right here. If I'm conservative, I might wait till it takes out 900 and really gets out there and starts to test those resistances. Maybe somewhere in that ballpark. You could be more aggressive if you wanted to intraday. For a breakdown, I'd really like to see it at a minimum take out that first pivot right here as a support zone. Now, some traders be all in, if it can close down and take out today's low. But this type of consolidation pattern, it's, in theory, statistically speaking, it's probably going to break to the upside based off of the pre-existing trend, but there's always that potential for a downside move. So I like these kinds of setups where you take, this is the type of trade where I might do something with controlled risk on it, something like a debit spread, where I have a fixed risk graph just due to the potential, that it runs the opposite direction of what I think. Maybe one of those Geno style butterfly trades that are not super expensive, that are relatively cheap, where you can get a good explosive price move. So all in all, just if you want to get down and get aggressive on the entry, you take that down into an hourly time frame. and you're looking for it to clear, key support resistance zones.
Mm-hmm. Boeing next, if we can. Matt, laying off some workers here today. Marky, it's a reminder whenever you see headlines like this that there's going to be continued fallout from this COVID situation and the lockdown that we've had over the last little bit. Obviously, Boeing stock is up here today, and it's an interesting reversal candidate. Mark, what's your read on something like this? Boeing laying off workers, probably good for their bottom line. And some of this was voluntary. I'm sure some people at retirement and whatnot, Matt, that just took an early pension or whatever it might have been. But Mark, we're going to see more headlines like this, aren't we? Firms, letting go workers, and especially in industries like airlines and Boeing and that type.
Oh yeah, absolutely. No question about it.
Mm-hmm. Matt, reversal characteristics down there.
Well, let's stay. Yeah, we do have reversal characteristics. And what was interesting is we did a little bit of a bottom feeding bracketology on the podcast on Monday, and all the hate we've thrown Boeing's way for the last year and a half, rightly so, mind you, 100% rightly so. It did win the game about what stock do we think is the best investment for the next 10 years, right? Boeing is still one of those companies that it's never going to go away. The U.S. government will never allow Boeing to go away. That's number one. Number two, I think we've undervalued some of their aerospace and defense contracts and revenue that comes out of those areas of the market as well. The one thing I never want to see again is a prediction on the 737 MAX coming back to the market. And I've started to see those predictions that make my teeth hurt a little bit. But it was interesting to see Boeing win that game, number one. Number two, the layoffs started with 2,500, Tim. And most of these were volunteer layoffs that took early pensions, that were near retirement, so on and so forth. But they do have an additional 3,500 that they're laying off in the near term. And they expect over the next year to lay off about 10% of their global workforce, which accounts for about 16,000 jobs. So this is not a small number when we're talking about Boeing. And you absolutely are going to see this more and more in a lot of these distressed areas of the market, because even though the stock market has recovered in large part with the NASDAQ, the S&P, the NASDAQ above the yearly high, the S&P 5% from the yearly high, the Dow Jones, the Russell 2000 catching up to those indexes. So you're seeing some price action come back in because of the theme of the economy reopening up. Everybody's going to get back to business as usual. But what the reality is, and most people, the smart money knows, is that this is going to take a long time. The stock market might recover. The economy might start opening up, but it's going to take a long time for the labor market to get back to those levels. It's going to take a long time for manufacturing data to get back to the highs. It's going to take a long time for all of this economic data to get back to the long haul. And so these companies, i.e. Boeing, they're not looking at their stock valuation saying, let's keep our workers hired. They're looking at the economic condition and the length of the economic recovery that is going to occur. And that's going to take years. And so, yes, you're absolutely going to see this more and more and more out of publicly traded companies that lay off people that expect further layoffs in the future. You brought up the airlines earlier here today, Tim. The airlines are expecting to lay off even more and more people coming into the fall season. And so in this situation, yes, you're going to see more layoffs. And that's one of the reasons, in my opinion, that even though you might see the economy reopen up, consumers for the most part get back to business as usual. From an economic perspective, these companies are forward thinking. They're thinking 2 years from now, and they're looking at this economic recovery that's going to take years and years and years. Consumers might want it to happen next week, but best case scenario from an economic perspective, just to recover from where we were even 3 months ago, you're probably talking 2022, 2023, 2024. And so with companies that are forward thinking, stock market forward thinking, yes, you're going to see more of this happening. And it's sad. It is sad. There's no doubt about that. I don't want to see it. You don't want to see it. Nobody wants to see it. But layoffs are bullish for stocks.
Well, yeah, but they may not be bullish for the economy at large, because the original wave of layoffs that led to such a surge in unemployment, the historic stuff from the lockdown, Matt, you mentioned earlier and pointed out, those are low income jobs, service jobs, people that probably could replace that job, pretty quickly when the economy starts reopening and all that kind of stuff. Not to make any light about their loss of job there, but when you're talking about engineering jobs, we're talking about a lot of higher income jobs.
It's a different demographic. There's absolutely no doubt about that.
Yep. So that wave could be interesting to see what happens there. Amazon next, if we can. Matt, you had mentioned that they had acquired some small little company. I didn't actually catch that news. What was the acquisition?
Yeah, Amazon, it's not a publicly traded company, so nothing really to see there, but Amazon to acquire Zox for its driverless vehicle technology. And 2 years ago, Zox, I believe, was valued at about 3.2 billion. They did come underneath that valuation. So Amazon's looking to start acquiring companies. And this is something Amazon does. They wait for companies to get distressed and then they acquire those companies. It's actually very smart from Bezos and Amazon.
They do a lot of acquisitions, actually. If you look at how many companies he's acquired over the years.
Yeah, but when do they do their acquisitions? That's where you see the genius of Bezos really come in, because when you look at AT&T, and I'm not a big fan of AT&T, so I obviously have some bias there, but AT&T, they acquired DirecTV, Time Warner at all-time highs. That's what they did. Amazon, they wait for these companies to get absolutely obliterated, and then they start buying up entire industries. It's like after the subprime market collapse, and you had real estate investors literally coming into Detroit buying up blocks of property. That's what Amazon does. Amazon waits for a company to get distressed, i.e., JCPenney's, for example, or, they come in, they destroy brick and mortar, and then they start buying up all brick and mortar, i.e., Whole Foods. And then, they wait for, instead of buying Zox driverless technology, which was all the rage back, 2017, 2018, 2019 with Uber and Tesla and so on and so forth. They wait for a market crash, and then they're like, hey, let me go put my $34 billion in cash reserves to work. And so it just shows the genius of what Bezos has built with Amazon. They really do have a juggernaut here.
Yeah. And that's an interesting pullback. I do want to look at the FANG stocks here in just a minute and talk about some of these pullbacks. Technically, you don't love the fact that it dipped below that MA there, Matt, but obviously a deeper pullback on Amazon.
Oh, you're not looking at Amazon's pullback as a swing trade here.
No. I would want a deep pullback for position trade type thing.
Yeah.
Is what I would be interested in. I might want to, I want a little bit of price to come back even further than where it is right now, quite frankly. Walmart next.
Give me an example of that, Tim. Pull up GDX real quick, Noah.
Mm-hmm.
I was talking to one of my students yesterday out of Chicago, and he's a big gold guy. I'm a big gold guy, and we were looking at GDX, and he's like, "Well, what?" He was like talking to me about gold. And I'm like, "Well, you're perfectly fine on how much gold you have. But if you want more access to that space, what about GDX?" And we pulled up GDX, and he asked me my opinion on GDX. And I said the exact same thing you said on Amazon. I said, on GDX, I would love a pullback to $30. Now, you might not get it. You might only get 31, 32, but you got to map out what you want, right? Mm-hmm. And then be patient enough to kind of let it set up and not chase it. And so from a pullback perspective on some of these types of stocks, yes, you look at the stock we looked at yesterday, BGS. When you're looking at BGS, that is a beautiful bullish retracement with BG, G as in Gary. You have that beautiful bullish retracement coming back down into the rising moving averages, slowing momentum, upward movement in price. That's textbook swing trading principle. And obviously Noah's going to talk about that later on tonight with our pro member community with the Step System Mastermind group. That's what you want to see from a pullback perspective. Something with increasing momentum from a trend perspective, decreasing momentum from a candlestick perspective at support, increasing candlestick with momentum on that bounce. Perfect, just ideal bullish retracement that you could put into a textbook. When you're looking at Amazon, when you're looking at gold, the gold miners, those are not retracements. Those are slowing momentum in charts, violating of support levels. Candlesticks are all over the place. When you're seeing that, don't chase that from a swing trading perspective. Wait for that deeper sell-off and then utilize it from a position perspective instead of a swing trading perspective.
Yeah, that BGS setup, Noah, from over the weekend was just a fantastic example of what Matt's talking about there. Obviously, the pullback candlestick, kind of slowing down momentum, then confirmation. There's a lot of, rules to building swing trades, obviously, but that confirmation point is going to be an important point. And Noah, you are talking about that tonight. Confirm, yeah?
Yeah, absolutely. So I think we'll have a lot of fun. Everybody should show up.
I'm looking forward to it. Walmart, Matt, in capitalism, there are winners and there are losers. And we have been talking for some time
about how it should be.
That's how it should be, of course. And retail has been under distress. There's no question about it. Apparel companies, that kind of stuff. Walmart came out today and said, listen, we're going to expand our apparel offerings. And in another sign that the big giant is coming out of this and looking at ways to actually capitalize on different changes in consumer behavior and the retail sector. I found it interesting. It warmed my capitalist heart. I got no problem with this at all. And, I applaud Walmart for providing a product that the public's going to want and whatnot. Matt, what was your read on this story?
It's not only a product that people want, it's a very cheap product in an environment where you have perhaps 30% unemployment, right? For a lot of people that have lost their jobs, obviously they've been benefited from the unemployment claim, the unemployment numbers that, the $600 a week and so on and so forth. But at some point that's going to be pulled away. I applaud Walmart for what they did today. Now, obviously the market doesn't like it, but I am going to applaud Walmart. They are creating a partnership with ThredUp on secondhand clothing sales. And so looking at, and they're not the only publicly traded company that's been doing this, but Walmart is the biggest of the bunch so far. And so they are partnership with ThredUp on secondhand clothing offerings.
Mm-hmm. I don't know why we didn't lead with this one, but let's bring up Twitter if we can here. It's an interesting
talk about politics, and nobody wants to talk about
I understand.
because it makes us all want to go pound
Silence.
It triggers us all, doesn't it? Politics, run. I get it. In 2020.
That sounded German-like. I'm just saying.
You're not allowed to speak. Quiet.
Well,
I have spoken.
That's actually the conversation here, isn't it? I mean, listen. President Trump is probably the biggest person on Twitter, I believe. I don't know if anybody has more followers.
Oh, are you kidding? Not even close. What are you talking about?
Who is it? Oprah?
Every celebrity.
Will Smith's got a pretty good following.
Has more followers than Trump.
I would argue he's the most important person on Twitter.
If he left Twitter, Twitter would crash.
Sad.
Yes, that makes more sense than no. He doesn't have the most followers. That's all celebrity stuff.
Yeah. But his value.
I think a Kardashian baby has more Twitter followers than Trump does.
Dude, the Kardashians buy more followers than Trump has.
Yeah. So
Trump and Twitter are not getting along here. Marky, I'm sure you saw this news. I mean, break this down for me if you can. What is happening?
For the first time, Twitter does a thing where they label a tweet, basically a fact check, basically saying that something to the effect of, this tweet might not contain accurate information. And they did it to President Trump for the first time regarding the ballots, mail-at-home ballots, where Trump's been really hammering against that, as has Fox News and Republicans. Anyways, Trump didn't like it, obviously. It's beautiful theater, just from an entertainment standpoint. You knew that the second Twitter did something, whatever it was, delete a tweet, or in this case, label a tweet as potentially misleading, Trump came out and said, and the very concerning words, if you're a shareholder of Twitter or a social media company, something to the effect of, we're not going to stand for this. We will not allow this. And I don't know what punitive action he could take necessarily, but he is the president. Right. And so as Twitter fact checks more of Trump, if they do it again, I don't know what that would come, but the rhetoric was very pound the pulpit. We are going to do something. We are not going to allow this to happen. I don't know what the action could be. And I don't think the market knows either. I mean, Twitter's down a little bit on the news, but they're obviously not scared. I mean, they're down 3% because I think the market as a whole is like, well, what could that be? Like, take over Twitter? I mean, I don't know. Do you guys have any ideas on what?
If there were no news today and we were analyzing Twitter, we would say that's profit taking at the 200-day moving average.
Yeah.
I mean, it's just not Chewy's down 5%, Twitter's down 3%, PayPal's down 2%. I mean, it's not like this abnormally huge sell-off because of it.
Investors in Twitter don't care that President Trump has a beef with Twitter. Not as of right now.
But I don't know. And I tried to think about that when I saw this last night. I was like, all right, so if I'm the president and I hate Twitter and I want to do something, I mean, what could I even do? And I couldn't think of anything plausible. Do you guys have any thoughts on something plausible?
Regulations, public pressure. Just the playbook being put out there. But I do think we as a society need to have an open conversation on not Trump, but politicians in general using social media to push out agendas that may or may not be actual factual. And again, I think we need to have that conversation. And I don't think that conversation is for the halftime report, maybe the podcast. But I do think we have, as a society, need to have that conversation because we are seeing it more and more. And I'm not throwing, cold water at Trump for what he said about mail-in ballots. I completely disagree with him on mail-in ballots. But Trump's going to have his opinion the same way every other politician is going to have their opinion on, and they're going to push their agenda in any capacity they want, both from a Democratic and a Republican standpoint. But should politicians be able, and again, I'm not talking about Trump specifically, should politicians, regardless of the aisle, regardless of the belief system, blatantly push out information that is not factually based without social media labeling that?
Do we really need Big Brother to tell us how to think critically? Probably. I don't know.
Does the American consumer possess the skill set of critical thinking?
Touche.
It's a tough
I mean,
conversation.
on one hand, I don't want Twitter telling me what absolute truth is. Absolute truth is a
Sure.
really rare thing. On the other hand, I don't want the government coming in and telling a company that engages in speech what they can and can't do. So I don't like either side of the issue. It's a tough issue.
It's a tough one for me
it's
as
an
well.
extremely tough issue. And that's why I say we have to have a conversation. And again, I will always side on free speech. That's where I will always side. But free speech isn't the fact that you can say anything. That's been proven through Supreme Court laws. What was it? Texas v. Johnson. So in terms of this, free speech does not give the ability for an individual, politician, public official, military official, or any other individual in America, the ability to say whatever you want, whenever you want. That's not what free speech is. There are lines in the sand that have been drawn for that. You can't yell fire in a crowded theater, for example, right? Because it has an impact on the public good. And so we have to have an open conversation. But the problem with having an open conversation in this capacity is people have drawn their lines in the sand and they're not willing to actually have that conversation in any capacity. I don't want social media, limiting free speech. I do not want that, not in any capacity. But I also don't want politicians to use social media as a way to as propaganda. And so that's the conversation I think we have to have.
Yeah, and obviously the market doesn't really price in. The market is probably where you are, Mark. They don't know what could happen.
I mean, this is good for Twitter.
Yeah, it's not. Pullback would be great.
The number one guy on Twitter that has the most influence is having a public beef with Twitter. I mean, Twitter, Jack Dorsey's got to be sent back being like, thank you for the free marketing here.
Yeah, they're talking about Twitter, so it's good for Twitter. This is all publicity is good publicity type moment.
But the time we all read that they labeled that on his tweet, though, every one of us probably had the same question. Oh, snap. What's he going to do? Because you knew he was going to come back with something hard and strong. He actually did tweet at Twitter today and social media, some strong things, but
I thought it was going to be harsher, though.
I did too.
I thought he was going to come in hard.
Like pop some popcorn. Pop some popcorn.
I was ready. I had the popcorn ready. I had the nice little ranch salt ready to rock and roll. I was throwing it in. I was getting ready. I was going to be entertained. And it was like a 2-2. I'm like, oh, I'm let down. It was kind of like the first time I watched Minority Report. I was just let down.
By the way, this doesn't just apply to Twitter, though. Facebook, YouTube, Spotify, anybody who has had this issue in the past, it's going to be a continued issue. And I don't know what they can do to Twitter, Mark, but I know that with like Facebook and Instagram, there could be antitrust stuff.
Shouldn't we always side on the side of free speech, though?
Free speech and capitalism. Yep. When in doubt.
Yep.
Free speech and capitalism. I'm with you. Next here, Disney, if we can. Guys, the reopening theme is happening and it's going to continue to happen and we're going to keep talking about it. They announced that on 7/11, July 11th, they're going to be opening some of their parks in Florida to limited capacity. It will sell out. That headline will happen as soon as they put the tickets up there, Matt. It will sell out. We saw crowded beaches over the weekend. this is obviously a positive for bullish thesis and arguments. We're going to keep seeing these storylines. Mark, is Disney interesting to you at all here? I mean, with the parks reopening, the economy getting back up and running, I know we're at elevated levels. You might need a pullback. What's your read on Disney?
Yeah, I mean, I think you can label Disney in the distressed industry category. I mean, they're not down too far from that previous trading range, relatively speaking. So it's not cheap right now. So it's not cheap per se. But if you were to get a pullback, I think as long as the theme that the economy is opening up and there's no headwinds there at all, if that remains constant, I think you can trade pullbacks on Disney like you would normally in a technical environment. As long as that theme is still there. Like if that we're reopening, things are good, we're making progress. I mean, that's a powerful theme. That's a powerful theme. And as long as there's no changes to that, all of the distressed stocks, because they're not going to go up 9% a day, right? You're going to have typical patterns, consolidation patterns, pullback. But I think pullbacks in all of the distressed industries are really interesting when they do eventually occur.
Mark made an interesting point when he said, you're not far off those all-time highs, so it's not cheap. And I immediately started thinking about cheap being PE ratios, right? If you were to buy Disney at the all-time high on the announcement of Disney Plus when it pinged at 153, you're actually paying a cheaper price at 153 than you're paying today at 121. The PE ratio back then was right around 21. Currently, it's at 41. And that's not because prices went down. That's because earnings have been obliterated. So the entire argument on Disney, if you're looking at it from an investment, and I do believe Disney is going to be a wonderful investment at some point for a very, very, very long time. But if you're looking at it from an investment perspective, you are absolutely buying into the thesis that the economy is going to reopen up, consumers going to behave like they did as usual, and we're not going to see a second wave that actually impacts some of these areas of the market a little bit more than, say, tech stocks do. And so that's what you're buying into. I'm not there yet on Disney, but maybe another earnings report, maybe some more price action, maybe we see some more positive economic data. I will be there at some point in the future. I'm just not there yet on Disney.
Linda asked a very interesting question. It's kind of like a would you rather, Zoom or Disney?
Investment?
Yeah.
Disney.
Yeah. Just the PE ratio and the valuation. I think Zoom is just so elevated. There's too many question marks around it. Given a long enough timeline, we know what Disney will be. At least we have a pretty good idea. We don't necessarily know exactly what Zoom is going to be. I'm sure the chart on Zoom looks better, Noah, in terms of the short term. So if it's a trade, let's take a look at Zoom. Earnings coming up, deep pullback, rotation out of it. I'm not even sure I like that either. So
that's a double top at 180. That's you're seeing a little bit of a cup and handle form, but we're early in that. From an investment perspective, don't get me wrong. I love Zoom. I love the company. It's a great trading stock. When it was range bound between 60 and 80, you could have mapped out a really, really, really good investment thesis. But as of right now, with the metric rise you've had in price, I think from an investment, you're just paying too much right now.
Another reopening story here today. Apple Computer is opening a bunch of stores around the country. From what I read, you have to do drive up pickup service. You can't necessarily go in and whatnot, but just more of these stores. We're going to keep seeing them over and over and over again. By the way, the market, was selling on some of those tech names. Apple's only down 0.5% here, guys. Some relative strength there.
There's some big time news there. Apple currently, as of right now, from an intraday perspective, and you'll see this change quite frequently in this environment, but Apple right now is the #1 market cap company in the world, not in the world, but in the United States. And that's because Microsoft sold off a little bit more than Apple did today. Apple currently $1.376 trillion market cap versus Microsoft's at $1.357 trillion. I mean, don't get me wrong, I love both companies, but Apple did reclaim that throne for at least one day.
The FANG stocks are interesting looking at it. And those two go back and forth. I know Microsoft was a lot bigger there for a few months, and then Apple's made this historic V-shaped recovery. So back and forth on that nose and nose. But all those FANG stocks, guys, I mean, Google's got a little pullback. I know this is early on in this little rotation, but I'm interested in the Facebook pullback probably the most. Did you see this Facebook chart, Noah?
I like the setup. That's a good looking setup. It's got all the double whammies, the 220 resistance, the rising 9, little hammer action. That's pretty.
Still early for me, a little bit here. I'm waiting to see how this whole thing plays out day by day on this rotation theme. But there's some names that I'm going to be paying attention to. We'll talk about that in the coach's corner. A couple more, maybe GE, Matt. They did sell one of their distressed parts of their company, their lighting division. This is one of the reasons why I've been so strongly against GE for years. They've had parts of their company that have been more profitable than less. They have to sell off shares or sell off part of the company themselves to pop here. You got to like the chart if you're a GE owner. You got to like the reversal. I have no interest in this company at all. I think people know my opinion about it. Matt, what's your lead here?
Tim, at least they're selling off a negative aspect of their business instead of selling positive assets.
Fair point. Because they had to do that for years, by the way. They sold the profitable divisions for a couple of years there. Fair point. And they have made some changes in that regard. But I have so many concerns about the structural problems with GE still. I could find 8 billion companies I'd probably be more interested in personally. Mark, you got any interest in GE, dividend payer, the old stalwart?
I would rather eat grass.
None at all.
Listen, I'm a pretty boring investor, right? I'm a pretty boring trader. I'm usually in trades 1 or 2 days, like max. I'm usually, looking to companies like GE and Ford. I mean, they're even too boring for me. They're just so freaking boring that they just don't capture my attention.
Yeah. Guys, that's Stock Talk. We're going to be transitioning into our last section, which is the Coach's Corner. We kind of break this show down into segments each and every day. The first bit, we always do top-down, big picture market skyline analysis, then individual company news as we go through the Stock Talk. The last section here on the Coach's Corner is where we go around the room and each of us kind of have a couple of ideas or, candidates or stocks that are on our watch list that we bring up and watch. A couple of things I want everybody out there to be aware of. Tonight, like I mentioned earlier, we have a webinar, 7 p.m. Eastern Standard Time. And if you're looking for some education and some content to go through as you're waiting for more of this kind of stuff, one thing that you could do, quite frankly, is go through the 7-step guide to trading. Noah, if you can bring up the website real quick. I think this course is so good for beginners out there. And if you've never gone through it, and if you're not a pro member yet and you want to go through a free course, we built this course on tackletrading.com so that people can get a couple of hours of education, content, structure down as they approach the top-down part of the analysis, and those 7 steps that can walk them through how to place a trade, understand the markets and whatnot. Find the courses up there on the top if you can, Noah, and find the 7-step guide. Yeah, and drop that link in the chat if you can. It's a free course. You can go watch it and go through all of the whole thing and get some free education over on tackletrading.com. We'd love to have you join us. Let's do Coach's Corner here, guys. Let's start with Noah. Noah, you were on one of the reports over the weekend. I know we always do 5 different reports: the stock and options, newsletter, commodity, and Forex. What's on your mind? What are a few candidates, companies that you're paying attention to?
Well, I've liked the BGS trade. That's been a pretty nice little pullback and firing off. We got a nice little upward confirmation. You might be a little bit late to the party, but you could still potentially trade this one bar by bar. And then one we talked about in the Traders Lounge this morning that I really like the setup on is Clorox. Beautiful pullback setup into a known support resistance zone down there between the 20 and the 50 period moving averages for a deeper pullback with a nice bullish engulfing confirmation candle. So I think that's an interesting setup. Post earnings, pays a dividend, nice technicals, good trend.
Yeah. And you still have, this is an example of early aggressive type of confirmation versus conservative. For me, it's got to get back above some of those daily EMAs and some levels there. And because of the depth of the pullback, you have different ways you can play that. I'm sure tonight in the mastermind, you'll be talking about some of those different concepts when you go through confirmation levels for sure. Marky, you're next. What about you? What are you paying attention to?
DraftKings going to $100, like breaking out again. The stock is has one of the best performances over the, if you want to look at monthly performances, it's just been on fire since the March lows. It is a cult stock. I would love a pullback in it. I would love to acquire some cheaper. I'm probably going to sit here and just watch it, making zero money on it. As
What happened to your 10 shares?
You know, listen, if I, like once I said, I'm in a trade for a day or two, like I'm not in the trade very long, you know? So I'm a swing trading scalper. That's just who I am. So, I mean, DraftKings, I would love to have a reasonable technical setup. It's just so hot right now that I'm not getting it, but I'll be patient. I'll be patient. Also looking at some deep out of the money puts on some of these distressed industries going out 60, 90, 111 days. You know, I mean, I buy the reopening theme. I don't think it's closing down. I don't think we're closing down again. Now, once again, who knows, right? We don't know what the virus, but I buy that whole rotation thing quite a bit. So looking, but once again, I'm cheap. So
are you going out further in time so you can get the levels you want? Is that?
Yeah, that's the thing, because, you know, once again, price level, cost basis is king for me. And so, you know, I'm not going to chase price. I'll trade chasing price. But as far as, I mean, these are those would be investing decisions to get a good credit associated with a company that, you know, I wouldn't mind owning. It just comes down to price levels. I was hoping for a deeper pullback on gold, but that got all sucked up today already. So.
GLD is the way you've been approaching that one. You know, by the way, if you're out there and you are a pro member and you don't know much about what Mark's talking about with naked puts deep out of the money, Mark, you did a really good write-up on this weekend's commodity report on boomerang investing. I read through that and I really enjoyed it. I thought it was very valuable. Kind of explain that a little bit here in case somebody who's a brand new investor out there.
A lot of individuals, because I mean, 99 out of 100 individuals, when they hear me or someone else talk about naked puts and price levels you want, they have no idea what you're talking about. You know, this is the vernacular, the mindset. They're just not accustomed to it. They're accustomed to buying stock or selling stock, and that's the primary vehicle in which they use. And so in the commodity report in the coming weeks, I'm going to revisit some principles of using naked puts on areas of the market that you would like to acquire from a theoretical big picture standpoint. Like what is that all about? At tackle trading, it's referred to as boomerang trading, where you look to acquire things that you want to own and what the mindset is for that. And so we'll be revisiting that for individuals who would like to learn more about it.
I love it. By the way, I dropped a link in the chat there, guys. If you've not had a chance to review that over the weekend, I know it was a 3-day holiday weekend. You might not have gone through and read the post. I thought it was excellent, Mark. So good work on that. And I look forward to more content on that as you write the next commodity reports. For me here, and you guys, you tell me if you're interested in these charts, grabbed a bunch of them that are grabbing my attention. Now, these I added to my watch list today. Give me Nucor if you can here, Noah. NUE. Little reversal there. You know, you've got that just that little shelf there, resistance that we're pressing up against. I know we've ran into it. I don't have confirmation yet, but I'm seeing reversals in some of these types of names. I brought up the aforementioned Facebook, which out of all the big tech names that are coming back, I do like that one developing. I need a deeper pullback. There's no question about it. That might take days to develop before I do anything, but I do like that candidate, especially the old resistance, Noah. You know, one thing from a technical perspective always grabs my attention is old resistance, new support zones and levels as they come into moving average pockets as well. NVIDIA, this was a Momo high flyer there for a long time, and we're getting a deeper candlestick here today. Candle makes it a no touch here on that perspective, but you got an old resistance, new support type of zone developing with a 20-period moving average. Let that thing cook on the retracement, and I'm going to be watching that one.
You know how I know there's no real fear in the market, Tim? That clean bounce off the 9 on Facebook, that clean bounce off the 20 on NVIDIA, they came down to those and got bought up like that. Like, yeah. I mean, that is always a signal to me that there's no real fear in the market.
Well, let's take a look at another one, Adobe. I mean, some of these big names that you would think there would be some fear in. And you know, we do have a couple of days of profit taking on these big names up on the top. Same thing, came right back into the 20, held that zone, that aggressive trend line. There's some interesting things in that regard. And other than that, there's not a lot of new ones on the bear side grabbing my attention today, but I'm still watching Taiwan Semiconductor, TSM, which was on the reports from over the weekend. And just if and when, and if it does happen, break below that support down there, I think there's tons of clear air on that Canada in that regard. Last thoughts here, guys, from everybody around the room. Back on the S&P or the NASDAQ, if you can. And yeah, bring up Micron, by the way. Did you guys see the move in Micron here intraday flying?
I sure did.
Oh my God.
Micron upgraded their guidance at about 35 minutes ago. They released a press statement upgrading their revenue and EPS numbers. Anytime, I mean, and those kind of guidance releases in market hours outside of earnings, fairly rare, but that's what they did. They upgraded it. And if those upgrades continue to happen in other companies, the market's going to love that, right? Saying not only is the worst over, but brighter days are ahead.
Not only is it rare, it should not happen. Company releases like that, the market should have some time to actually go through the news, go through the data, go through the numbers. They should not happen during the actual trading day.
You go back on the daily there for a second, Noah. The little rally here, back on with the moving averages, brought it right up into the 200.
Oh, look at that ping pong between the 50 and the 200, like boom, boom.
I was looking at this one as a K trade before that news. I actually had it on my candidate list this morning. It was kind of dojing in this middle of this symmetrical triangle. And I thought, we're going to get some movement one way or the other. We're now starting to get a little bit of a pop, but it's still inside that range and inside that triangle in some regards. Back on the ES, last thoughts here, guys. Let's just talk. Matt, what are you going to be watching on this market heading into the rest of the day? We're sitting at 3,000, doji right on the 200. Give me your last thoughts here, young man.
Oh, well, my last thoughts are not really on the marketplace. I mean, you're sitting on a doji. You really haven't seen any type of movement from a daily perspective. I think it's going to be a boring day coming into the close. So I'm not really that interested there. However, there was a report coming out of Goldman Sachs on cryptocurrency, specifically Bitcoin, and I want to get you guys' take on this. Goldman Sachs comes out and it says, okay, cryptocurrencies, including Bitcoin, are not an asset class, right? Now they have a few bullet points. Number one, they do not generate cash flow like bonds. Number two, they do not generate any earnings through exposure to global economic growth. Number three, they do not provide consistent diversification benefits given their unstable conditions. Number four, they do not dampen volatility given historical volatility of 76%. Number five, they do not show any evidence of hedging inflation.
So Goldman is ripping the Paul Tudor Jones thesis. Is that right?
You couldn't come up with the top 10 list? Like that would have been better.
Well, they had a couple of others. We believe that the security whose appreciation is primarily dependent on whether someone else is willing to pay a higher price for it is not a suitable investment for our clients. We also believe that while hedge funds may find trading cryptocurrencies appealing because of their high volatility, the allure does not constitute a viable investment rationale.
Listen, and I would just like to say, it brings me great pleasure to have Matt citing Goldman Sachs. Just, I just enjoy that, so.
I didn't say I was pro or con. I'm just saying what Goldman Sachs said.
So let's deal with point number one. Is it an asset class? So their argument is that it's not, because it is not specifically identifying some value outside of just the representation of price.
It doesn't participate in the global economic growth. You cannot cash flow on it, and it's a purely speculative type environment. That's what their argument is.
I have no problem with their conclusion where they said it's not an acceptable investment for our clients. If that's the take you want to take, Goldman, that's fine. Saying it's not an asset class is crazy. It's absolutely silly.
I just wonder when the report is going to come out that says Goldman bought Bitcoin.
I guarantee exactly. These firms are so funny. They're flip floppers.
What happened with Goldman today reminds me of what Jamie Dimon did a couple of years ago. And Jamie Dimon was given a little open conversation Q&A, and he was asked about Bitcoin. And he said, if I catch any one of my traders trading Bitcoin, I'll fire him on the spot. And it came out later that like Jamie Dimon bought Bitcoin the next day after Bitcoin fell. So it did remind me a little bit of that.
It's got $170 billion market cap. A lot of people use it. It's firmly in, built into the structure. I don't know if I have a strong take. I believe it is an asset class. I'm leaning that way. Maybe you can make an argument. It's just a technology, Matt, I guess. There could be that discussion. I have no problem with the conclusion. I don't know why they got to come out and try to rip it to get to the conclusion. Just say it's not something you want to invest in, Goldman. That's fine. But I think they will. You will see that flip-flop headline at some point here. Marky, does Goldman convince you off your GBTC watch list candidate?
No, dude, if Bitcoin tanks, I'm going to buy some. I mean, once again, I think it's, and I don't even know how to classify it. It's not really an investment. It's not really a trade. I just think the swings are so big in Bitcoin that if you look to build a position bottom feed, that, might take some time, but eventually it goes back up, so it's just this weird speculative trade. But, if anything tanks, I'm usually interested in it.
But you're talking for you personally, like down 7,000, 6,000 level.
Yeah, I mean, I don't listen. If I don't, it comes down to, and this is like a phrase that's been resonating with me lately. And one of the things, like when the market, I mean, you had short sells on like a ton of stocks today. That's not a healthy market. That's not a market where people have this fundamental conviction. They don't have a fundamental conviction in Beyond Meat if, just a little bit of price movement causes the short sell to trigger. Most retail traders don't have a true fundamental conviction that, hey, if price goes down, yes, I want it. I mean, it's the whole premise of the article I wrote in the commodity report this weekend. So I don't have a fundamental conviction in Bitcoin. And so I wouldn't put it in there. But, I think I just mostly like to buy some so that when I make money on Bitcoin, I can just say, hey, join the party, but I don't have any fundamental conviction on it. Not like an Altria or an AT&T or a Verizon or a Walmart or so many other companies at lower levels.
Yeah.
I would like to have a fundamental conviction. I'm more just like curious and interested. I think there's something there. But I don't have any like, oh my gosh, like gold. We all have a fundamental conviction in gold.
Well, traders on the market are having a profit-based conviction. By the way, the NASDAQ is about to go green. So much for the sell-off here, at least in the short term. I have no idea where we're going to end up, but we are seeing, just some intraday strength on stocks. In fact, we're only down 0.44%. See the candle almost up there near the high. But these aren't fundamental convictions either, Mark. I think these are traders just trading, right? I mean, it feels like the price action right now. Guys, that is our show here for today. There's always many things we do during the show, trying to have some fun. I'm still trying to figure out the joke Matt said earlier. I'm gonna have to go back and watch that with Matt, see if I can get it this time. I just didn't hear it, by the way. I did not hear it. Second thing is we, have a lot of fun breaking down the markets, doing the analysis, going through companies, but we're here to promote our community as well. If you're a pro member, we love you. We're here for you. If you ever need anything, shoot Mark an email, team@tackletrading.com. We've got the mastermind group tonight. We do our daily lounges and our nightly shows and all kinds of different content. If you're not a pro member yet, there's a 15-day trial link in the comments below. Click the link, come and join us, try it out, see if you like it. We know that you'll love it and that you'll want to be a long-term member of our community. Great job, Mark. Great job, Noah. Thank you, Cody, as always, for producing and hosting. And Matt, fantastic job. Guys, we're out. We will be back tomorrow.